It is interim results time here at XP Power. We have set up our socially distanced studio here at their premises, and I'm joined by CEO Duncan Penny and Gavin Griggs, the CFO. Let's go straight in, dive into the results, Duncan. Group highlights, really.
Yeah, I mean, I think it goes without saying, to use the word that the conditions have been unprecedented is probably an understatement. Challenging, yeah. And we're really pleased with what we've done in really difficult situation. We've had really robust demand from their healthcare customers for obvious reasons, which we can go into later. The semi-fab business started to recover in Q4 last year, and that's continued through the quarter. And I think the guys in the supply chain have done a remarkable job actually getting product, keep moving to our customers in this difficult period. And we're pleased to announce that we're going to resume the dividend as well, which I'm sure Gavin will talk about in more detail later.
Gavin, before we get you in your comfort zone of figures and numbers, let's deal with the uncomfortable zone for many companies and many people, COVID. How have you been coping and how have you been dealing with it throughout the different organisations?
Well, we've been dealing with it since January. We've got manufacturing in China, as you know, and we were shut down in China from essentially end of January through a lot of February and into March. But we quickly set the rules we were going to work to. So our first priority was the safety and well-being of all of our staff. The second priority was keeping supply to our customers, keeping them supported, and finally preserving and focusing on cash. And that's been our mantra all through the last 6 months. And I think we've come out of it very well. So today, all of our production and logistic facilities are working. They're all operational, and they have been. Our supply chain is in good shape as it's recovered over the period. And we've actually expanded capacity in Vietnam and China to meet the level of backlog we now have. So we've come out of it as well as we possibly could in our eyes.
And as I said, we'll get you to convert that into the numbers in a moment. Duncan, let's look forward a little bit. Yep. We normally do that at the end, but regarding COVID looking forward, is that going to be maintained? Are you kind of out of the woods a little bit now?
As Gavin alluded to, our challenge is supply, is actually getting the product to our customers. The demand has been very, very strong because of COVID. I think it goes without saying that there's been a lot of polarisation of winners and losers in the COVID and post-COVID era, I think. And I think we're fortunate that we're exposed to some sectors that have benefited from COVID. And I think they will going forwards as well. We've seen an acceleration of trends which were already happening. I mean, you could put them under an umbrella of digitisation, and working from home is a good example. More IT needed, more video means more silicon, and that's actually plays to our strength, being a major supplier to the semiconductor manufacturing equipment sector.
You mentioned healthcare now, so let's bring that in now.
Absolutely.
Is it just broad brush healthcare because of COVID, or?
Yeah, I mean, there's interesting things going on there. So we were a supplier to over 60 different ventilator products. So you can see why demand for that would be strong. But actually, kitting out these intensive care units doesn't just need a ventilator. It needs a drug delivery system, patient monitor, suction pumps, hospital beds, also full of power supplies. So we've benefited from that, including specialist ultrasound for lungs, specialist X-ray. But the other sectors in medical have actually been quite weak, interestingly enough. So a lot of the stuff on robotic surgery, endoscopy, general operating room equipment, surgical equipment has been quite weak. And we expect that to bounce back next year. Yeah, but I think there's a realisation in the world that actually generally there's not enough kit in the world. And although we're going to see quite a huge demand for medical in 2020, we don't expect it to actually be as high in 2021, but we still expect it to be higher than it was in 2019. So we're not seeing healthcare capitulating after this, is our view at the moment.
Gavin, let's put you in your happy place now, talking about numbers. Is it a happy place on the interims, and how is this all going through into the actual figures?
Orders have been very, very strong. Orders were up 45% on the same period in 2019, so at 146 million orders. Revenue was up 6%, 4% in constant currency at about 105 million. So that just shows the level of backlog we've built and the amount we have to ship in the second half of the year. So, we've entered the second half of the year in a very strong position. Gross margin was up slightly. We did have some increased costs because of COVID, particularly as we had the China factory was shut for more or less 2 months, and also the high levels of air freight costs. As air freight dropped off, the demand picked up for PPE to be shipped across the world. So air freight costs were running at 3 to 4 times their normal levels. We were trying to be passed a lot of that on to customers, but that has hit our margin in the first half. But those costs have normalised, so we expect them to be in normal levels for the second half of the year. Adjusted operating margin was down slightly. We've continued to invest in the business for the long term, and we feel that's the right thing to do. But our cash focus has paid off. Our net debt's come down comfortably. We're now at 34 million of net debt, and that gives us confidence, as Duncan said at the outset, that we can start repaying the dividend.
Duncan, there is some kind of restructuring or reorganisation on the horizon, Vietnam and also North America. Just talk to us about that.
Yeah, I mean, I think where you're going with that, I think one of the things we've really benefited from, if we go back to 2019, when we had the Section 301 tariffs to deal with, having a Vietnam production facility put us in a really good position in the market, because we transferred a lot of products from China into Vietnam so that our US customers could legitimately avoid paying the 301 tariffs, which were 25%. So that was great. What's happened as we lost China in February, March, as Gavin said, we were able to actually still run Vietnam, which came up on stream straight after Lunar holiday on the 1st of February, and still keep product flowing to customers. We also have a number of customers who are sort of key to us, who actually really value the supply chain resiliency that we've demonstrated, that we can actually provide them product out of Vietnam, so we're not purely dependent on China. And we have a number of customers who have already said to us that they won't be designing in China-sourced products because of probably the trade tensions between the US and China.
North America?
North America for us is in good shape. I mean, obviously the incidence of the virus is very high there. Our North America facilities are still running and have run right throughout the crisis, delivering product to customers.
Gavin, back on the numbers, and we're talking dividends here, and obviously there's been a level of controversy around the world, here in the UK as well, about dividends being paid at a time of loans being given out, furloughed staff. What's the situation regarding XP?
Well, XP, we haven't furloughed any employee across the world. We haven't made anyone redundant because of the COVID-19 issues, so we've been in good shape. We haven't taken any of the UK government funding. We did qualify for some Singaporean funding, which we have taken. It was issued to all companies operating in Singapore. So on that basis, we've decided we will return to paying our dividend from Q2. So in October, we'll pay a dividend of 18 pence and look forward to carry on paying that going forward.
Before we get to the old look ahead, let's drill a bit more down into sectors and sector performance, Duncan.
Yeah. I think the interesting one to talk about is the semiconductor equipment manufacturing sector. The demand that we've seen for healthcare is obvious. That was going to happen with what's happening with COVID-19 and our position in the medical market. I mean, it's difficult to think of a medical equipment manufacturer in the world that we actually don't deal with. Semifab is very interesting. It was in a cyclical downturn during most of 2019. We saw a recovery in terms of orders in Q4 last year, and that's continued through the first half of 2020. I think there's two things going on there. There's obviously an obvious recovery in the end markets, but there's also technology changes going on, and I think we're benefiting from both those trends, a cyclical recovery and the next step to technologies. And I think that's in memory. We're seeing people move from sort of 64 layers of 3D NAND, as it were, to 96 to 128. Customers producing new tools for that, and we are actually designed into a lot of those tools and are just starting to benefit from that, which is exciting. And then we've got the other thing in the logic market, people moving to smaller geometries, people going from 14 and 10 nanometer geometries down to 5 and 7, which is quite exciting. And I think we're also benefiting from that. I think on top of that, the expansion that we've done over the last few years in the product line, going up the power and voltage level, has actually enabled us to get more design-ins on the same tool. So we continue to be very excited about semifab. And you look at the drivers, before we would talk about, big data, augmented intelligence, the Internet of Things, automated vehicles. There's so many things driving the demand for silicon, and now you've got this huge acceleration of digitization because of COVID, driving more the 3G rollout, even more requirements for comms and other things that are actually going to drive demand for silicon.
Gavin, how's that going to translate as far as your look ahead's concerned regarding financials? Plenty of potential there?
Absolutely. Look, we're excited about the future. They see there's a lot of long-term trends that we will benefit from and leaves XP in a very good position for the short and medium term.
Duncan, a final word from you looking ahead, and let's go back. You did kind of say there a big thanks to your workers and your customers, I imagine.
Yeah, I mean, the organisation's responded tremendously, really. I mean, our IT infrastructure was good, so it wasn't a huge issue for us to work from home. The people who couldn't work from home in the production facilities have done a great job keeping product flowing to our factories, as have the people in our logistics hubs. So they've responded really, really well, and we've been able to operate safely, obviously observing all the epidemic control and prevention measures.
And do you think that's given you the platform to look ahead on?
Absolutely. As we enter the second half, we enter the second half with a record customer order backlog of £138 million due to the really strong demand we've seen in healthcare and semi-fab. We will expect to ship that backlog in the second half of the year, so we'd expect to have further revenue growth in the second half. We have to be cautious about the overall conditions, really. COVID-19 hasn't gone away, there could be a second wave. There are the obvious macroeconomic concerns, and also there's concerns about trade tensions between the USA and China. But despite those concerns, we feel really quite good about the future and the long-term prospects of the company. And I think our customers have really valued the supply chain resiliency that we've shown. I don't think we could have been more pleased with what the organisation's been able to do.
Well, Gavin, Duncan, thank you very much for giving me a socially distanced update on your interim results.
Thanks.
Thank you.
Thanks, Dick.